Good morning, everyone. Welcome to the London session on TopstepTV. If you're here for the first time, my name is Dee, aka Deeyana Angelo. I've been trading for 18 years. I am a Series 3 licensed trader, specializing in some of the more alternative products such as precious metals, energy markets, etc. Right, so I see there's a couple of questions here. So Barry says that his positions got closed. I don't know whether, like yesterday, he was supposed to be flat by 12 p.m. Central. That's 6 p.m. over here. If your positions got closed then, that would be why, because they will close them out automatically at the end of the day whenever the market close happens. And yesterday it was earlier. Obviously, I did warn about that during the yesterday's London session. But if it happened after, I don't know. So, there's no reason why they should be closed overnight. I see we have someone saying good day in Serbian. Dobar dan. All right, now we have GWiz saying they're long copper from 459.90. I'm still stalking platinum because I think we have a potential for a swing lower yet again. We had a bit of a non-event yesterday, as expected, right? So because of that, it's quite likely that we might have some more activity today after the holiday day. But we're going to be stalking some of the levels that I have here. Right now we're sort of in the middle of nowhere. But let's have a look at copper, because copper might be interesting. For now, I don't really see a setup immediately. If anything, it tried to go inside value. So let me just drag those levels out quickly. So London value is 460.40. Let's plot that on the chart. Put it in purple because that's what I like to do. Now these are, again, London specific values. They are not COMEX values. So we're just looking at the value areas from London. We did have a little supply that is visible around 461.50, and that's kind of the area where this failed. So a couple of things that you want to see if you're in a long. I always give hypos for both sides of the story. I don't like to come into the market with any sort of a bias, unless it's like super obvious. But even then, you still need to have something for the other side of the story, just in case it doesn't quite work out. That's why I like to have 3 or 4 hypos, right, to account for both longs and shorts at different levels in different areas. That way, you're not kind of caught like deer in the headlights going, what the hell happened? It's like you always have another orientation point where you're going to be looking at things. So if you want to see longs, we really need to stay above VWAP, but we also need to start hanging inside the value area. And right now we tried, we failed. So now if we get weakness around VWAP, I don't see this holding, right? Because copper has a similar story developing on a larger time frame that platinum has. This is why I look at the weekly charts. It's not because I want to look cute. It's because it provides us some valuable clues. Now, if we take the hypothesis that we did have some very big releases and that they're all out of the way, do we really expect copper to just keep kind of screaming up or smashing back down? Probably not, but we are at the higher end of the previously established range. They did try kind of to pop that, but it resulted in a double top. Double top on a weekly is a topping pattern. So I would be short biased just from that point of view. Now, yes, granted, we're quite far away from it because it's a weekly chart. However, the higher time frames can cause some other time frame participants, somebody with very deep pockets, to come in and go, yeah, actually, you know what, these areas shorts are probably more likely. Let's adjust inventory, smash it back down into like 430s or something, and more for you, even 415s, and then maybe ping it in the range for a while just to piss everybody off, right? To make everyone super miserable because there's no obvious trend and it's a range on a super large time frame. How annoying. But yeah, there are opportunities there. We have a smaller area on the daily chart. But in order for this to really manifest on the chart, we do need to see that strength at VWAP from Globex, because without that, we've got nothing. There is another area that I'm looking at, and that's an anchored VWAP from the recent significant low. That was all the way down at 419.55 that we had pre-CPI, and then we got obviously the expectation of CPI, which is always quite reactive on copper. And now we don't really have anything that would move copper all that much. So I would be looking for smaller opportunities there. I certainly wouldn't be looking for 400 ticks like I was in platinum. I didn't trade yesterday. I had a pretty busy day. We went to see our new home. And we had to pop down to storage, which was quite far away. So the whole trip kind of took about 5-6 hours. By the time that we were home, the market was already closed, right? So I didn't look at the markets past the London session, and that's actually a good thing because I had a pretty decent day the previous day. Now, if you know how stats work, every time you have a massive day, usually your next day. The very next day tends to be your worst day. So over the years, I kind of learned if I have a really good day, to just chill out the next day and just let the dopamine squirt that's going on in the head settle down and just stop you from thinking, yeah, I'm the wizard, and then do ultra stupid things. We never really stop that. You know, it's a behavior that you always have to moderate. Now, yeah, so let's look at what happens around this VWAP. So if you're long at 459, 459.90 has merit, we should actually see some buyers stepping in. We can look at time and sales as well. Now I'm going to put it down to 1 just to get a bit of an idea of what the smaller guys are doing too. And we're going to fall to the lower time frames, which in this case for now is a 30-minute chart because I want to see what they want to do here. On the visible volume profile, we also have the point of control. Now, point of control, I don't really like getting involved at point of control on such a small time frame because it sort of means that this is where everybody agreed on the price. And if you're looking for either a mean reversion or a momentum trade, you really need to pick up speed through that. And if you look at the way volume is, this was a huge reaction. You know, it's bigger than all of these volumes. So right now I'm not really in favor of longs. We would need to see some bigger orders stepping in before we're like, yeah, the copper is long. But it is at a precarious area, right? So VWAP is a decision point, as is POC. So, you know, for now I would be just in observation mode. Furthermore, we're still inside the initial balance, which means the other time frame participants have not come to join the party yet. So I will be waiting, you know. I don't actually have any setups just yet. So let's talk. So this is the initial balance. I made sure to mark it off. Plenty of space on the average ranges. I mean, they're nowhere near these areas. Let's see what the previous day's options are saying. And mind you, these options are from Monday. Was it Monday? Or are they from Friday? Yeah, because yesterday was a holiday day. So they can still be useful. We have some puts around 465, which could be a nice target for any longs. Overshooting the value high from London. To the downside, if we really start to bleed, I don't have any other levels until 429. I do have some average ranges on the way there. Yeah, from the options activity, they don't really see anything. So, you know, it's just, to me, this just looks like it's range bound from yesterday. Because yesterday COMEX is from here, right? So this is called, what is going on here with this stupid Microsoft thing? So yeah, this is COMEX, so that's where it started. And if you notice, I mean, we're still pretty much there. So that supply from yesterday's COMEX seems to be of interest to someone because we had a sell-off there. So right now, that value acceptance, I would be really suspicious of it. And furthermore, it's not the biggest value. So to me, yeah, I would be waiting. But, you know, if you're long already, do watch out for strength at VWAP. You know, you can always rationalize most trades unless they are like, you know, going straight into supplies or something. But we're not, right? We're on the daily chart. We are, we do have some sort of a range. So, you know, I can see how maybe a bit of a pullback could be on the cards. So let's watch it together. Now, platinum, like I said, I am stalking more shorts there. However, before that happens, we could have a rise up to at least gamma wall at 1020. That is also where we have some average ranges. Both London session high and 24-hour highs are within about 10 ticks of each other. So 1020 all the way up to 1025 would be my rough area where I want to see some reactions. So either you know, further sort of call buying around there or a reversal of some point. So I don't know. I keep my mind completely open to whatever they want to do around there, but it's definitely a decision point. If we start to bleed lower, the first thing is kind of similar to copper. I want to see the Globex overnight VWAP show some weakness, and then to maybe stop around 1000 level, which was a level of interest throughout last week. That is also the projected volatility area from the Mondays and Fridays activities. So if you look at the options activity, they can use the implied volatility to actually do a projection of how far it should go. And it's kind of similar to average session range lows and highs, because usually those levels seem to line up with my levels. So something to consider there. Let's have a look at some questions. Swerverstack says tips on improving sleep schedule. Wow, that is a loaded question. So yeah, sleep is very important. I think we are in the industry where lack of sleep might be a bit glorified. Oh, if you don't sleep, you're the hero. Actually, that's not very true. When you don't sleep, your brain deteriorates, and obviously any kind of proper sleep schedule is very important. It is the reason why I don't trade through Asia, London, and New York, because I need sleep, right? Are there opportunities to be had? Yeah. Is that more important than my health? No, absolutely not. Like, I wouldn't look this way at 44 if I didn't prioritize my health, nutrition, you know, being physically fit and all that. So one thing that's helped me is to be a lot more mindful about the sleep hygiene. Like, what is that? You start to prepare for sleep. First of all, decide what session you're going to trade. Don't try to trade through all 3 sessions. That's just lunacy, right? And you're going to burn out very quickly. You know, you're not going to be here in 10 years' time, because you will be suffering from, you know, disorders that all really stem from us messing with our circadian rhythm. Circadian rhythm, if you're not a nerd, is basically our internal clock that is synced up with daylight and nighttime. So it's basically something that tells you when it's time to sleep. And unfortunately, with all of the devices that we have and everything, we have difficulty staying away from things like the blue light. There are ways around it. Years ago, I think about 2-3 years ago, maybe even longer than that, I did do a video on my channel that said how to avoid burnout. And I spoke about some of the things that I started doing as I got towards my sort of late 30s and early 40s to effectively make my sleep schedule a lot better. And a couple of things that I did was to make sure that I have a set time when I'm planning to fall asleep. So effectively, whenever you fall asleep, these days you have fitness watches that can tell you when that time is, go back 2 hours. Now, 2 hours from the time that you fall asleep is the time when you need to start getting ready. So you almost like have a ritual. And I'm not talking about, ritual where, you put on a silly outfit and then chant. I'm talking about, making sure you don't have any water after a certain amount. You have water up until a certain point, then you stop having water. Otherwise, you're going to be up and down during the night, disrupting your sleep. That's not a good thing. Second thing is to, if you are on your phone, if you're on your computer, on your laptop, please use the nighttime filter. It's basically a filter that blocks out the blue light and it puts everything in nice sort of orangey reds. I also have Philips Hue lights throughout my entire house. So when I'm getting ready for sleep, I will put down all of the lights into like orange and red. And why? It's because our circadian rhythms associate the red and red and yellow lighting and orange, purples with fire. So that was something that back in the day before electricity, we would all be sitting around the campfire. It was all nice and warm and nice and red. And that would actually have a chemical reaction in our brains that secretes melatonin, which is the hormone needed for sleep. Now, some people pop melatonin tablets like it's candy. Over here in the UK, it's actually very difficult to get a hold of melatonin because it is a controlled substance, because they deem it is pharmacologically effective enough to give changes to your body, like true things, not just a vitamin pill or something, but it actually affects how your brain works. I know some people who get very depressed on melatonin, which speaks to the strength of it. So if you take it every day, some people at some point become a bit morose. So it's like, why is that? It's because it's an external substance and there are ways to make the melatonin secrete completely naturally. You don't have to, always resort to pills. Now, another thing is that in the morning, you do need to get some blue light. Now, blue light, yes, it's the screens, but a better choice would be to go outside to get some sunlight as you're having your morning beverage, whatever that is. For me, it's coffee or caffeine. And I usually go out, at the very least, I sit next to a window and try to get that blue light into me to wake up. So blue light at a certain part of the day is absolutely fine. And the blue light will make you wake up earlier. It will make you more awake, more alert. So those two things I've used to great success to control my sleep patterns. I've even done it throughout the day. So here's another thing that I do. At this point, I think most people know that I suffer from a chronic illness. So that means it affects my energy levels and I have to be very careful. Throughout the day, I will typically do at least one yoga nidra session. Yoga nidra means sleep, but it is sometimes referred to as a non-sleep rest. However, I'll be honest, I do fall asleep. So I have my little power naps whilst I'm listening to a yoga nidra audio. So I have an eye mask that I use for that purpose. I get myself all cozy, and usually that's right after the London session, so about 4 or 5 hours into it. I might have a trade going, but I kind of bed down and get all cozy, and then I kind of pass out for about, depends. Sometimes it's only 20 minutes, other times it's a couple of hours. It really depends how much my body really requires on that day. And it's the same thing, right? So you make sure that you are taking care of your mental capital by doing a little reset throughout the day. So power naps can do that. Now, don't get me wrong, I hated naps when I was younger. Even when I was a kid, you couldn't get me down. Like my mom was like, just go to bed. And I would be like 11 p.m. and 2 years old and still So I'm a natural night owl, being very up in the morning. It's always been a big challenge for me. You can probably see it in these videos as well, where I'm a little bit loopy in the morning, especially if I go back to my old self where I don't really sleep until 3 or 4 in the morning, and then I try and get up and do some sensible trading. It's just not It's not where it's at. But, you know, as I got older, I kind of accepted that I needed to do something about my sleep. And as traders, if you're really serious about making this work, I would advise that you start implementing some more elaborate practices around your sleep patterns. And step one is don't trade through all 3 sessions. Your data can help you there. If you go back in through your performance stats, have a look at what time of day, like actual hour of day when you have the best results, and discard all the others. I mean, you know, this is not the type of a job where you have to work 6, 7, 8 hours a day and make money. In fact, the more you're in the market, the less likely it is that you're going to make money. It's like complete opposite of everything that you've ever been taught. And you don't need to spend an inordinate amount of time or do a crazy amount of trades in order to outperform the market, okay? 2 to 3 a day, more than enough. What is going on with this Microsoft thing? It's like, it just pops up randomly. So hopefully that will help you going forward. Hopefully that helps. Okay, let's see. Andrew says, what do you feel about the buys with GC about 29.28 with displacement? I don't know what displacement is. I think that's an ICT term. I'm not in favor of long gold at the moment. I'm really not. Why? Because if you were here yesterday, and if you also watched at the buzzer on Friday, you would have noticed that both Coach Jay and Coach Paul and myself were kind of talking about this area here at 29.30. We do have some call levels there too, and I was looking at that area for further shorts. So if anything, gold for me would be something to look for shorts because, you know, we have potential for ending the war in Ukraine. We have a newly formed technical supply. We have a newly formed range. There's a huge reversal ahead of the 3,000 area. So, you know, some ways away from it, but still they failed to make new highs and now are creating a supply. So what does that usually mean? If there is a new supply, there is a high chance, if supported by macro, that we may get some shorts and we might see some take profit moves. You know, this one, the big smash was definitely some kind of a liquidation move, because you don't get these with, like, you know, Tom, Dick, and Harry trading one contract on GC. You know, you get big institutions that have decided to hedge their inventory, and then this sort of move happens. It's relentless, it's massive, it wipes out several days worth of moves, and those liquidations are fierce and furious. But there's a time when they deem that macro is actually no longer in favor of gold longs, and then you see a reversal. So I have 29.30 today as my area for potential shorts. And it's always a zone. It's never like, oh yeah, 29.30, let's go in. I need to see what they want to do with it. If they go higher, that's great. I then have the top to think about. But my primary point of interest, zone of interest, would be in and around 29.30 for further shorts. So we'll see what happens. Tommy V says, D, critically thinking, are we sure 1 hour initial balance means anything nowadays compared to the 1 hour it took for the initial balance decades ago to give all participants time to maneuver? I would say that depends on the product you're trading. So if you're trading equities, obviously the first 30 minutes is pretty sufficient. But if you're trading gold, I would actually say 90 minutes, because gold opens an hour before the New York Stock Exchange. And really until that post-NY cut time zone is done, which is 3 p.m. over here, and it's 9 a.m. Central, there's not going to be any super significant moves. I mean, you might have wicks, you might have gold wagging up and down, but if you're looking for a committed swing intraday, there's certain points in the day where those swings are statistically more viable, and that's usually after 9 a.m. Central. Why? Because that's the time when the Forex options expire, and we have them expiring every single day. It's called the NY cut, and it happens 9 a.m. Central, which is 10 a.m. New York, and 3 p.m. GMT, over on this side of the world. So all of my New York Stock Exchange trading for new positions, initiating new trades, is after that time. So I would say gold, I would actually be looking at the first 90 minutes as the initial balance, but ES, I would actually be looking for the first 30 minutes. And yes, it is relevant. Like, I always notice if I try to break my rules and trade when we're still inside the initial balance, the moves are sluggish, they're slow, they don't really go anywhere, and the best you can hope for is a very painful 20 to 30 tick scalp. And when I say painful, I mean slow as hell, right? You enter a trade, nothing's happening. You know, like, what's going on here? But once the other time frame participants come to the party and you get an extension either below or above the initial balance, things liven up. People kind of perk up and they go, whoa, okay, somebody's managed to take us out of this first hour range. But yeah, sometimes it's 30 minutes, other times it's 90 minutes. But, you know, I do take 1 hour as a loose reference. Is it still important? I know that Dalton argues that it's not important. I would argue that it's more important, just purely looking at all of my guys when they're trading, how things go when they're trading during the initial balances, and how things go when they're trading outside of it. Trades outside of it are always smoother, and they are much more drama-free. So take it as you will. That is my statistical experience of going and looking at these markets for 13 years in the futures space. So if you are of opinion that Dalton now thinks that the initial balance is not relevant, I think the way he phrased it, he said not as relevant. So not as relevant. So it's not going to be relevant for all days, especially days when you have a release in and around about the time when, let's say, COMEX is opening. So there are days when initial balance is not a good indicator. So let's say we have a CPI like we did last week. You're going to have a massive candle. What's the initial balance going to tell you? Nothing. That we've had 230 tick move in the space of 5 minutes. How is that going to help? You know, is it going to give you good areas to short and long from? Probably not, because, you know, if you're at some new levels due to a repricing from the CPI, what's going to happen is that it's going to be like, it's so far away, we're not going to be reaching that. Like, you're going to need so much more volume to go back where it was. It's not that it never happens, but it's just very, very rare. Okay, so in those kind of situations, I will actually wait for everything to settle into a new range, and then almost use that range as if the initial balance smash from the CPI never happened. So that's kind of my way of coping with, you know, huge wicked candles as a result of a release. All right, so let's have a look at more questions. Stop Hunter says, good morning, Dee. Can you give me advice on a stop loss on DAX? I can try, but just be... you know, be wary that we're not the same trader, right? I don't know whether you go for the same trades that I do or whether you're more scalpy. So it would really help me if you actually tell me what sort of a trader you are so that we can discuss. And yeah, so then we can, we can again... discuss. If you are, you know, if you're looking at some trades that I do, like for example, for me, on a range bound day, I will typically only look for about 30 to 35 ticks on DAX, and I would use the same stop loss. If we reduce in a range, so let's say that we have a reduction in average ranges, I will go down to 25 ticks. I don't go any lower than that because I still need to have space in order to decide rather than letting the market decide for me. So smaller sizes, slightly wider stops. But for now, like we actually have a very decent range. So I have been using 40 ticks with a view to capture a bigger portion of the trend for the day, which will very likely be at the very least 80 ticks. But on some days, if I'm thinking, okay, we have something pushing this, like some sort of a release, might even go for 200. So it's like a big trade. You're not going to get those every day. You know, those have to be done on release days when we try to do something, then maybe we fail, then we go right back to where we started. Or we continue. You know, it depends what the release is. So yeah. But for those types of setups, I do give it a wider stop. A third of a smaller position size. So if I would, let's say, normally trade 3 FDAX, like full DAXs, then I would go down to 2. And I would use a 40 tick stop. So the position size versus stop loss size, you have to match them, right? So otherwise it's too much risk. Do I trade crypto? No, I do not. I had I had 3 crypto trades in my life, but they were not intraday. They were in 2017. And I held Bitcoin from 4.5 all the way up to 20K, and I thought it was a great trade. And then I took it off in 2019 thinking, well, I've held it for nearly 3 years. That's like nearly an eternity in my head. No one knew COVID was coming, so I was pretty happy with my 4R over like a number of years, and then COVID happened, and I was like, okay, should have kept that longer, but it's okay. You know, crypto is not really my jam anyway. Since then, tried popping in a couple of trades. I know that they've gotten better. Like when I tried intraday trading it, I think during COVID, it was horrendous because it would just like move once in 30 minutes and then that would be it. Like you couldn't actually do anything with it. Since then, I see that they've hired more market makers, so you can get some more committed movement throughout the day. But from what I can see, it's mainly during either Asia or the New York session. For some reason, Londoners are like sleeping on it and don't really see it being super reactive. Okay, bad trades. What do you think has been the most contributing factor to my trading success? I think the analytics side, quite frankly. The fact that, that and being super stubborn, like really stubborn. Because, when I decide to do something, there is no failure. There's just time, and there is universe yielding to what I wanted to do over time. So as a part of that, I did use the Kolb's experiential learning cycle, which means you do some trading, then you go back, you look at your stats, you analyze things, you see what could have been done right, what could have been done wrong, what was done wrong, if anything, and then try to minimize your weaknesses while focusing on your strengths. And that's always done through data. The way I do things, I find huge comfort in data and numbers. And so just looking at this DAX, they're trying to reverse it here, but gotta keep an eye on it. For now, I don't really have a setup. I mean, they tried to go down into the London value, but they're kind of hovering above. What is this? Hovering above the New York demand from yesterday. Yeah, so my biggest strength is being stubborn and not letting things go, wanting to be as best as I can within my brain power, and analytics, being super methodical, super studious. I know that I don't look like a nerd, but I am. Trust me. And so I'm perfectly able to sit over spreadsheets and numbers for hours on end, sometimes days on end, looking for things that I can improve or intricacies that I can apply. This is why I say to people, go back and see what time of day you did the best. So not just, oh, let's just click buttons all day long, but you go back and see, okay, I suck for that time of day. Let's try and avoid that, see what happens. And lo and behold, you avoid a time of day when you suck, suddenly your results improve massively and you basically did nothing but stay away. Things like that, I also have a big pattern matching skill. For some reason, I'm able to see certain patterns that are not immediately obvious to all people, and I've always been like that. I have photographic memory, which freaked my mom out completely. So yeah, I'm a bit of a freak that way, and I don't like doing normal things. Like I'm not someone who ever went out to party unless I was working in the club, and I started my professional career as a musician, as a session musician, when I was 14. When I was 12, I went behind my dad's back to negotiate my album with a whole bunch of weird men, which was like 1992. So yeah, it was an interesting time. My mom wasn't happy, obviously. She was like, what are you doing going by yourself across town to be with a whole bunch of dodgy blokes in a room at 12 years of age? Stop it. But yeah, so I was always very driven. I was always stubborn. And I do not take impossible as an option. So when somebody tells me, you can't do this, it's impossible, my response when I was a little bit younger was, challenge accepted. And then I would go and do it. So however long it would take me, I would fulfill my goals, and without like anyone else pushing me or anything, I pushed myself. In fact, most people around me mainly tried to talk me out of things. I was like, when I was really young, like going back to before the Yugoslavian wars and stuff, I actually decided I was going to be a gymnast. Like gymnastics is a very big thing in the Eastern European countries. So I was like, yeah, I want to be in the Olympic team. And I was like 4 years old. So everyone laughed at me. They're like, ha, yeah, right. But it turns out I was made of rubber back then. So I was small, I'm still small to this day, and very flexible. So in the end, my mom just couldn't look at me hanging off ceilings in the house. And she said, let's just get her into the gymnastics class so she can learn how to fall at the very least, because look at what she's doing. Like, she's going to hurt herself. I was doing like somersaults from the bed and like just really not, like I was a very naughty child. So she signed me up for gymnastics. By the time that I was 9, I had already managed to get to the Olympic team that was supposed to be in the Olympics in 1996, because we were very young. You have to be of a certain age. Unfortunately, but then Yugoslavia fell apart, the funding fell apart, so that never happened. But then I found music, right? So I was always a very driven child. And I think that that also transferred into trading and into my businesses. Whatever I did since, I did wholeheartedly. I don't do things halfway. I did bodybuilding in bikini fitness. I was trying to sort out some of my bad eating habits from when I was a musician. So I'm like, I'm going to start doing fitness. And then, of course, what do? I go and sign up for the bodybuilding competition and win the bloody things, which was crazy because it was my first time competing. I really didn't expect anything. And I won my category. I didn't win the whole competition, but I won the category that I was in. So I was like, okay. And then I did that for probably about 4 or 5 years. I was competing. Not all the time. That first year I did like 10 competitions like a complete lunatic. Then I think I got really tired. There was a point where I was so tired from like the physical activity that I went to go to my car and I just stepped up to a random car that wasn't even the color or the make of my car and tried to get in it. And around about that point, I thought to myself, yeah, I think I'm done with competing. So yeah, I'm that kind of a person, right? I'm somebody who's always pushing to be the best that I can be. And it's never about the other people. It's about me, right? It's like, it's me versus me. I want to reach my own full potential, whatever that may be. So maybe if you don't, and I think everybody you see on Topstep TV has that sense. Certainly the the crowd of usual suspects. If you see the type of people we all are, it's all a pretty similar type of personality. A little bit obsessive, unusual. We've all had weird careers in, sports and other areas, and ran huge businesses, and then you go into trading. And, that kind of tells a story about the type of a personality that is the most likely to succeed. It's not like, oh, other people can't succeed. No, it's far from it. If you work on it, you will get there, right? But there's just like certain parallels that I can see in people who manage to get it faster than most others. And that's always to do with stubbornness, some sort of a nerdiness in there, and obsessive nature. So if you don't have those, work on developing them. You can develop any skill. It's not like, I'm not really of the camp that anyone can do trading, just like not everybody can be a professional footballer. So if you don't have a good memory, if you're terrible at maths, if you just hate numbers and you hate analytics, and you think you're going to be rich tomorrow from this, think again, because this is about analytics, methodical approaches. It's not about putting on a few clicks and stuff and getting lucky. If that's what you're thinking, you're going to have a very, very short career here. You're going to be one of those people that maybe has, 1 or 2 weeks of being lucky, and then you're going to blow out of an account and we will never see you again. There was a lot of that in the other prop firms back when we worked in office. A lot of them. Guy would come in, make $250,000 in like a month, then do a whole bunch of stupid things because now he's the wizard, and then they would march him out of the office the very next month because he'd lost so much money. These days we have the ability to try over and over, right? Topstep gives us the ability that even if you blow out of the live account, you can go back into the combine, work your way up through the XFA, then maybe get called up again. But back in the old days, one account was all you had. Like, there was no try again sort of thing. They would literally march you out of the office, and that would be it. That would be your account blown, and no do-overs. So, just by the fact that we live in a world where we do have multiple times multiple attempts to try and make this happen, many people don't really... they don't respect that, They take it for granted. They use that reset button as if it's going out of fashion. And, fair play to Michael Pataki is trying to tell you that it's not the way. Yeah, of course they make money out of it, but, he could as well just be silent and say nothing. But what does he say? He comes on and he says, guys, stop using it as a crutch. Like, he's not saying, yeah, man, press the reset button as many times because that's good for us. He's not doing that, is he? He's one of the only CEOs of a prop firm that comes on and goes, don't do that. Don't put multiple resets. Because they are trying to push you onto the live side eventually, right? And eventually the live side means that it's their money. Like, I don't know whether you guys think about this, but when you make all the cash in the XFA, that's a demo account. Where the hell do you think that money comes from when it's in the live account? What, poof, like, fairy godmother came and gave it to you? No, it's Topstep's own capital that they put behind you and finance you into a live account. So think about that the next time you decide to go up to like 100K and then blow up in 7 days in the live. It's Topstep's money. So, do they like seeing that? That you make a whole bunch of performance, funny money in the XFAs, and then they go, okay, we'll trust you. Let's put you in the live. And you go and blow up spectacularly. It's not right, to me, it's disrespectful. I don't know. Maybe I'm old school. All right. Tommy V says, Dee, today's initial balance more relevant than yesterday's. Why would you say that? Because yesterday we had the normal open. the close, I would say the settlement is a little bit dodgy. I wouldn't say that yesterday's initial balance is not relevant. I would say that yesterday's initial balance was for yesterday, right? I mean, I can see that DAX had a massive day, you know. So yeah, I would say settlement would be a bit more dodgy today. However, if you're looking at the previous day analysis, that's the value area. So we look at previous day's value and current day's initial balance. Initial balance from yesterday means not a lot to me. I think Hogue sometimes looks at it if we have like a late day spike, which is a profile concept. But in my markets, that late day spike is almost always a result of a take profit rally or a sell off into settlement. And it never bears any weight on the next day. So I tried, but I could see how a late day spike in ES, for example, if we have a short squeeze, that's really, that's really useful because those short squeezes tend to be pretty violent. But, in crude oil and in gold, it's like a little bit of a sell-off. Oh, yeah, great. It's not really a spike, is it? It's just a throw up into the end of the day. The Oriental Earl says, Dee, what's driving a DAX rally? Same thing that's driving the other equity indices. They do have a pretty strong economy in Germany. They are not really suffering. The rates and the inflation seem to be, under control. Cost of living, yes, it's expensive, but I think that will probably be more relevant for the commodities markets than the equities markets. And then on the other side of the pond, we have AI stocks and NASDAQ, Google, Tesla, all just, driving up and up and into the right, up and into the right, which is having a knock-on effect on DAX as well. Because don't forget that the American economy is the largest economy in the world. So, whatever happens over across the pond, it's going to have a big effect on whatever we do. Like, I don't know whether you've ever watched the Bank of England rate decision, but it's almost like this. The Fed cuts rates. Next meeting, guess what? BOE also cuts rates. The Fed hikes rates. Oh, lo and behold, BOE also hiked rates. It's because all of the economies are connected, right? So, and naturally, we have to follow whatever the US is doing, right? So I always look at BOE as like a little lapdog that's like, oh, what's Danny Powell going to do? And let's do the same thing now. Very rarely do they diverge in their monetary policies. But yeah, it's definitely an effect, combined effect of, strength of German economy, rally in the stocks over across the pond. And it's an equity index. People want to buy it. People always want to buy stocks. They very rarely go, hey, I want to sell my stocks. It's usually either panic selling, and you haven't really heard about panic buying, have you? Because it's not a thing. quickly, buy it. But panic selling is something's happening. People need to get rid of the equity stocks, and then they go into gold, they go into safe haven markets, because they are perceiving additional risk. Now, that theory somewhat broke down during COVID, so just be careful. There used to be this portfolio theory that if you have anything going on that's massively impacting the economy, the gold is just going to shoot up. But what we've seen during COVID, in light of the entire world on the brink of collapse, and gold was falling like equities. Then gold was recovering exactly like equities. So that sort of made everybody scratch their heads. It's like, what is different? Was it the fact that we were in a low interest rate environment? Because, when the old portfolio theory was being made, we had pretty high interest rates. So is that driving that change? Is that really the cause of that relationship? You can do like whole thesis on the reason why the inverse relationships between gold and stocks has broken down. And it's definitely not as strong as it used to be. If anything, ES is reaching all-time highs. GC is reaching all-time highs. What does that tell you? It tells you that they are positively correlated, right? They're not like 60, 70%, but they are all going into all-time highs. It's like, what gives, right? So it's definitely an interesting thing to look at. But it's also one of the reasons why I don't really tend to look at things like dollar versus gold, because that's broken down as well. Like on some days they will still correlate like they used to, but for the most part it's going to be like, oh, each product for itself, each man for himself sort of thing. So those relationships are not as reliable as they used to be. However, equities and the upside bias in equities, that's not going to go away anytime soon. So 9 times out of 10, if I'm looking for a trade in DAX, it's going to be a long, because that's what it does. The only time I would consider a short is if we've had some sort of an interest rate change. If we are quite obviously in a quiet range-bound day that is like very clearly established the highs and lows and is just not moving for like 5 hours, then I would be like, okay, maybe just, and even then I would wait and to swipe it from the long side more often than not. So I definitely have more of a long bias in DAX because it just rallies and trends so much. It just wouldn't make much sense. Like, for example, today we tried to go into the initial, actually, let's have a look at that chart just quickly. I'm going to try and find a trade today. So if we manage to end as a failed auction long, I also want to see that rising up outside of the London value, which is this whole area here. So this is London value from yesterday. And, the London value is pretty valid. It was massive. We didn't have a holiday over here. There was no President's Day in Germany. So it had a normal day, right? And it actually went massively higher. Shame I couldn't trade this. But yeah, today I need to dig a little bit deeper. But if in about 6 minutes we manage to finish inside the initial balance, that is when I'm going to start looking for my setup. And then hopefully, at the very least, get to the other side of the initial balance. Now, at the moment, that's offering me 92 ticks. It's quite likely that by the time this finishes, maybe we'll be a little bit deeper. If I want to do more of a microstructure momentum trend up trade, that is a possibility. I do those sometimes on DAX. But it's very likely that I might wait at least until 11 o'clock, so in another sort of 35 minutes, to see whether we get some sort of a sell-off, because I don't really, like my own stats say that the best trades for me on DAX come after 11, because by then I have enough data and they've done whatever they needed to do, and then I can step in as the market stalker D that I am and snipe my trade from levels that might not be super obvious to others. So yeah, but they're obvious to the institutions. All right, so let's have a look. I think there is a problem with TraderTainment. Now, if you're on Discord, there are ambassadors that you can reach out to. Another reason to be on Discord, because Wendy is all very well, but I know that if you're not a VIP member, you may not have the priority. However, on Discord, we almost always have ambassadors that will take care of you, and they will be clearly delineated in there. So check that out. And yeah, 11 a.m. London time. Yeah, I'm talking GMT because, this is the London session. And a lot of people are located in either in Europe or in the UK. I mean, obviously, some people are still across the pond, and, you might be a night owl or something. You might be on a night shift. And it could be a case of that. But most people are over here. Okay, so let's have a look. Yeah, so there definitely seems to be a problem with TraderTainment, so we do apologize. These things happen. Blue Boy D says, "Oh wow, you're the way you're what? Let's start it again. Way I look at the London balance. It's from London Open to Globex Open. A break of that is usually all the way from London Open to Globex Open. Wouldn't that be like let's say you have a trending day during COMEX? Wouldn't you be like missing 100 ticks by doing that? Like, you know. So let me get what you're saying. So if you're saying you look from Globex Open, let's see where Globex Open is today. This was the previous day, so this was Friday. So how do you approach that when you have a big trending day overnight? Do you just let go of this? Because you see, the way I think of things, when you have a move like this, like let's say it was like Thursday to Friday or something, I would, or was this today? This was today. This is the 18th. Yeah, so the way I would look at it, I would look at London to do the opposite from Asia, or COMEX to do the opposite from Asia in case that London didn't do anything. So for me, this would be a mean reversion back down into 2900 potentially. So what are you saying, Blue Boy, that you would just wait until all of this range? So you would let all of this go, and then if it breaks higher, you go with that, and if it breaks lower, all the way down. I don't know, I kind of feel like I would be missing a whole bunch of mean reversion trades that way. Maybe if it breaks upside with a trend, yeah. But to me, that's against my larger time frame supply area. So I wouldn't be looking for longs into a supply, because that's not really worked for me very well on commodities markets. It might work for equities, okay? If you're trading NASDAQ, DAX, ES, they have an upward bias. I constantly see people doing super dodgy trades into overhead supplies on equities. And they're like, yeah, I'm seeing a long. And then sometimes what happens is that supply does bring a momentary pullback. Then they get smacked in the face and then they go, oh, this market is shit. And I'm like, it's not the market, mate. You went into technical supply. Like, it's a shit trade. So yeah, explain to me this more. So it's there could be a very good strategy behind that. So if you have a trending move, do you still, like, let's say you're looking at a short, would you still just wait for the Globex Open smash? So wherever it is, you just wait until that's done? From London Open to Globex Open, and I make a range of that. But that would, again, to me, that would be comprising COMEX, and COMEX has, where's the GC? That's why I'm asking, because COMEX at the moment has 278 ticks range. So I can see it on my other charting platform. So do you miss the whole 200? Like, to me, COMEX is the main session there, and there's a lot of levels in there that are pretty reactive, like the value area from COMEX. So why wouldn't you play bounces of that, and why wouldn't you play value acceptances, for example? I don't know, to me that would mean that you're effectively missing out on the entire RTH move. So you're just disregarding that, and you're like, well, if it breaks this area, then we're in a new trend. I don't know, I'm going to have to look at that. That's actually, you've intrigued me. So I'm going to go back and have a look at that strategy and maybe backtest it. And, if it's working for you, that's great. But we always want to bring people new strategies, right? I don't know everything. And to be honest, I haven't traded gold that much this year. I've traded more platinum and copper. And I have noticed that it trends quite a bit for Globex, and then it stops. Like we were seeing that today in London yet again. So Globex does the move. Then we have a slowdown. Then we're going to have COMEX that does another crazy thing. to the tune of nearly 300 ticks. And then, the whole cycle repeats again. But the way I've always done gold is to wait until post NY cut. So I wait until my 3 p.m., which is 9 a.m. CT, and then see whether there's a sell-off. Sometimes that sell-off comes into the euro close. So euro close is very reactive on gold and crude oil. And for most of my career, that's what I did. Sell off or rally against the day's move into euro close, and then again into settlement on like specific products, like whether it's crude oil, gold, copper, or whatever. So yeah. Can I check DAX on a 15-minute time frame? I can, but on a 30-minute time frame, it just failed the auction. So yeah, 3 bars. I know that usually there's an average of 3 up bars that DAX likes to do, so I wouldn't be longing it right away, because from the bottom to the top, it's 70 ticks. Okay, so one way to look at this would be to look at microstructures. I do have a concept that I call pixie trades that do offer you a way to get in, but even when I'm on a 2-minute chart, I don't see a relevant swing. So what I like to do, I will wait for the market to make a relevant swing. And then once it does, I will have a reference point to limit my risk. And then we can look for further break upside above VWAP and all that jazz into a proper rotation through the initial balance. But my setup on DAX is now a failed auction long. I just need an entry. So I have a direction. I just need an entry. But yeah, 3 things. There is a chance that overnight VWAP gives us a sell-off. And if you look at where the newly formed demand is, it's actually 22,800 ballpark. And that will match 10 minutes and 30-minute demands too. We have gone above the put support from 0DT options at 22,836. This now usually means that we have reclaimed the puts area, and that we may have that pump through. And the next area is not until 22,890. And then finally we have some calls up at 22,930. So that will be the final target, which is all the way up here. But yeah, let's see what happens with our VWAP. I want a bit of a sell-off, some kind of a swing down, and then we're going to have a trade on DAX. So yeah. Right, let's see some more questions. Tuha Shajid says, what are those moving average values you're using? These are just 9 EMAs on high, close, and low setting. Now, I don't use them on big time frames. Really, I only look at them for timing purposes. So, for example, if I'm looking for shorts in gold, this would be it. So if we hold below this ribbon, this would be a short entry because we've definitely turned around and the trend is now to the downside. Do we test 29.30? I think at some point we did. We came pretty close. Certainly came close to that daily conterminous supply that I call them. Conterminous means a common price point. It basically indicates a market shift from the equilibrium back to the other side. I needed a name for them, and that's what we call them. So that's the Market Stalkers method. So anyways, I am using the ribbon to kind of as a timing tool, right? So if you're looking at entering a trade, guessing that this is going to break is a little bit tricky. And sure, you can kind of go, well, if this low breaks, then we're going to go up. But then what happens if this pulls back inside the ribbon? It means that the move is not on. We're still in a range, right? And also when I'm in on a move, I want to see the market stay underneath the ribbon for shorts and below the ribbon for longs. As soon as it starts to weave into it and flatten, so there's the slope of the curve. Is there a slope or not? And where are we? Are we above it or below it? And likewise, if I want to hold a trade, if it starts to hang on the other side, so if we turn around and I get it outside of the ribbon, that would be my early exit. So I'm pretty systematic with the way I do things. Just bear in mind that this is more for shorter term trades, because I have an issue with not taking profits. Like I'm perfectly fine finding trades and stuff, but for some reason when I'm malfunctioning, I just don't take profits, because in my head I'm always a swing trader and I like to hold trades. So when those opportunities are not around, I needed a way to force myself to minimize the weakness that I've noticed. And it's not, it's no longer that much of a weakness, but I still notice it creeping up every so often. And you always have, it's weird, like you always have to kind of keep tabs on the Muppet things that you were doing in the past, because they will always stay with you. They will never completely disappear, but you will minimize them to a point where like, okay, I'm aware of that. That is my trigger. Now I need to make sure that I don't repeat that. And then over time, you are still very aware of what you're doing. But the next time they start to appear, you're like, here we go again, Muppet D coming up. And then you stop yourself very quickly. So instead of letting it go, to damage your P&L, you go, right, I didn't take profits there. Why? Let's stop doing that and let's pull it back. That's something you're going to have to do as a trader all the time. Blue Boy D says, for me, it's like 3 to 4 a.m. Central. I mainly trade the break. When you say COMEX, you're saying bond, gold, oil, open. COMEX is precious metals, right? So COMEX is so gold, silver, copper. Strange enough, platinum is an oddball because platinum is actually listed on the NYMEX exchange, but it's traded on COMEX. It's like, what are you doing? I don't know what they were thinking there. So it doesn't start with, it's like it's a NYMEX product. Like, this is CMA for you. It's a NYMEX product, but it starts with volume and everything on COMEX. And then it also finishes with COMEX, pretty much. Like the volume dries up after 6:05. My time. So I don't know what they were thinking there, but precious metals, COMEX, energies markets, crude oil, gasoline, natural gas, heating oil, that is NYMEX. That has a different start time. That is 8 a.m. Central, and then COMEX is 7:30 Central. Or it used to be 7:20, but 7:30 is good enough. So yeah, it's not the same thing. And bonds, again, I can't remember when bonds open, but I think they open, do they open a bit earlier? I think they open a bit earlier. And they close earlier as well. So different products have different open times. They have different start and end times as well. And it all stems from the previous open outcry pits. So before, if you wanted to trade one product, you would go to the ES pit. But then if you wanted to trade lean hogs, you had to walk over to the to the other pit. There's none of this, let me just look at lean hogs. No, you would actually physically have to walk to the other room where lean hogs were traded and trade them there. And then if you wanted another ES trade, you would have to walk back to the ES pit. It's crazy, right? Like you have no idea how lucky we are to just, be able to have all these products here. El Par says, good morning, Dee, checking in from Canada. When is the Euro close for GC and crude oil? Euro close is at the same time for everybody because it's the Euro close, and that will be 11:30 Central. So 11:30 a.m. Central. That's 4:30 p.m. over here. So I don't know what time you are, in what time zone you are in Canada, but convert those and you will get your Euro close. So Central, that's 11:30 a.m. If you're on Eastern time, that's obviously an hour later, so it would be 12:30 p.m. So yeah. Okay. Do you do FVSX? Is that FTSE? I haven't traded FTSE in a long time, actually. Or are those Euro stocks? Let me remind myself, because I did trade FTSE and Euro stocks. Euro stocks were too slow for me. Let me just remind myself. What is the symbol there now? So yeah, if you're asking me about FTSE, it's a good product to trade. I just haven't traded it for a while because I think that's another data feed. Like don't quote me on that, but I don't think that's Eurex. I think that's London Stock Exchange, and I think that will be even more difficult. Now Eurostox is on Eurex, but I've always found it really slow. I don't know whether that's changed, but last time I traded it was probably 2015. And I remember kicking off a trade, then going for lunch. No, actually, I went to the gym first, then I went for lunch. I was gone for like 90 minutes, right? And I come back, it's like moved 5 ticks during regular trading hours. It's like, oh wow. Eurostox, yeah, the Eurostox are too slow for me. I haven't traded it much. I don't like it. Yeah. Is that the symbol for it? I thought it was I thought it was something else. Why did I think that Eurostox was? Yeah, interesting. I think they have a derivative or something somewhere else, but yeah, it's FESX. Yeah, yeah. So I don't like it. I don't know whether it's changed. I don't know whether it's changed. Maybe it kicked up in volume and then movement intraday. I can have a look. But yeah, honestly, I haven't traded Eurostox since 2015 because back then it was super slow. So let's have a look. Go to symbols. New stocks. It's a continuous contract. Let's have a little gander at what Eurostocks have done over the years. Let's do this. Okay. Let's see if it's still a snail or whether it's actually moved. Something's going on here. It's jumping like a bunny. What's going on? Let me load up another template. Something weird is happening. Okay, this is better. Oh, okay. Yeah. This is not the same Eurostox as I had. It's still doing weird stuff. I don't know whether it's the data feed or stuff or what, but like look at what it's doing. Like, what is this? Why are you jumping? What's going on? Settle down. Yeah, that doesn't look right. I don't know what's up with my data feed. Maybe I mean I should have it. I don't. Yeah, it's weird. So I don't want it to mess up my platform. I'm gonna have a look at it. It looks better than it used to be because it was painfully slow when I was trying to trade it. Like literally nothing was happening. But it does look like the ranges have improved. I mean everything's improved since COVID, hasn't it? I just for some reason never looked at it. Maybe I should. But yeah. All right, some reaction from VWAP on DAX. Do I trade ES and NQ? Occasionally I trade ES and Q only for the reversal challenge. Joking. So I used to trade NQ more, but then after COVID, it went completely bonkers and stayed bonkers. And I can't bother with, I just can't be bothered with NQ. Whoever you speak to in this industry, after a while, NQ just becomes an eyesore. You look at it, just the way the candles move, especially during the regular trading hours. It's a pain, man. It's a complete pain. It's just like, ugh, horrible. All right, let's try a little short on gold here. If we can break VWAP. Maybe a little bouncy bounce and then back down. What was I saying? Yeah, so NQ is, to me, it's kind of for people who have no patience, right? And if you want to be a decent trader, at some point you're going to have to develop patience. And it's only suitable for the most minute amount of people. Otherwise, what you're going to get with NQ, I always joke, NQ giveth and NQ taketh. Seemingly it looks like it's going to give you like so many profits. Oh my God, it's amazing. But then people get into a complete emotional mess with NQ. Because they're like, oh, I was right on direction, but it smacked me on the face so many times and I ran out of money. It's like, yeah, that's what NQ does. When if I'm going to run a trade that's going to last me 2, 3, 4 hours per day, I don't want it wagging around 50, 100 ticks up and down. That's horrible. You want something that is smooth, right? Now, if you're a momentum trader and, you're like hit and run sort of thing, which most people think they are in the beginning, I'm always very entertained by that. Say, oh, I'm a scalper. How long have you been trading? 6 months. Of course you are. So I always laugh because the only thing that's happening there is they don't know how to read the levels that will bring them more like bigger moves. So they just go like, oh my God, I got one. Oh, excellent. Like there's no analytics there. There's no confidence in the setups. It's just like hit and run, sort of almost like intuitively just clicking a button and hoping it works. That's not real trading. Like there's no longevity in that. And I always laugh when new traders tell me that they're scalping. It's like, what are you scalping for? Like, and then it turns out they're scalping on a trending day. I was like, why? It's not, like the market is offering you like 400 ticks in one direction and you're what? Racking up commissions for the brokerage? Like, well done, mate. And I actually got done like that for being a newbie trader back in the day by a guy who was sitting next to me, right? So we had a nice trending move in euro-dollar and Dee decides to go on a scalping thing because she thought she was being cute. So I did about like 6 trades and net, I lost a couple, won a couple. Net, I maybe made like 16 ticks, right? Maybe, that's like, so this guy he was a bit of a, not a very nice guy, but he's sitting there and I said, okay, well, I got 16 ticks out of that. And he went, why? And I said, oh, I did one trade here, one trade there, one trade there. He was like, yeah, while you were hopping around like a grasshopper, this is how that came about. When you were hopping around like a grasshopper, I made 60 ticks and I only paid 1 round turn. And I was like, oh. Okay. And it just changed everything for me. I was like, wow, yeah, he's actually right. Like he's an asshole, but he's right. So I was like, why did I do that? So that's when I started thinking about matching the appropriate strategies with the type of a day that we're having. So, if you have just a singular day where, we're going up, up and up, and I see people going, oh, one trade here, short trade there, lose the short trade, go back up on the long, make a little bit back what you've just lost on the short. And it's like, why don't you just settle down, zoom out a bit, and, pop a beta blocker or something. Find a good trade location, some kind of a pullback, and run the trade, man. Like, it's so stress-free. So, for me, that sort of put me on the path of blending what I was already doing as a swing trader and realizing that intraday trading is not about clicking buttons all day. There are times that when we're in a range-bound day, that is the time to scalp. But whenever I get people going, oh, I've been scalping all day, it's like it just went up. Like, why were you scalping? What were you scalping for? Just to give yourself more work? Like, I don't get it. Like, make money for the brokerage? So for me, I definitely urge people to match your strategy to the type of a day that you have. This is where profile can help massively. Rather than just, oh, I'm just a scalper. You can be a scalper all you want, but if you're doing 50 trades a day, that's not scalping, that's just clicking buttons. The best scalpers that I've seen, they do like 3 trades per day, maybe 5. On a really active day, if we are like moving up and down, it's a range. Maybe they'll do 10 or 15, right? But you're not going to see them do 100 trades, 200 trades. Like, you're not a bloody market maker. And actually, if you do 200 trades per day, it's actually against Topstep rule of conduct. I don't know whether you realize that. If you do 200 round turns in a day, they will ban you because they can't see, like, do you have 200 setups in a day? Are you trying to be a market maker? Like, do you have, and market making, you get a particular volume to fill on the day. So when you get to your position, they go, okay, you today fill 2,000 contracts. So you have to do that, right? You absolutely have to make more trades. Now, you have a choice. You don't have to do 1,000,000 trades a day. You can do, a few big trades. So, whack in a big lot size. And then grab a few ticks here and there. That's going to fill the quota, right? So, 50 lot, grabbing 5 ticks, you're still filling a 50 volume, right? Out of the 1,000 or 2,000 that you've been assigned. So that's how that works. It's not you're sitting there clicking like thousands of trades a day. Maybe back in the old days when everything was slower and you can see around you what people are doing, you could do 1,000 trades a day. But now you can't see the next guy. He's behind a screen, just like the rest of us. And you don't know what they're thinking. You don't know what Goldman is thinking because they're not in the room. They're somewhere, again, in offices doing their secretive things. So yeah, think about that the next time you're trying to do like 200 trades and thinking that that's the way to do trading. Less trades, more cash, less effort. Zoom out and get the bigger picture in mind, and chill. Most importantly. Jayhawk says, Dee, do you feel that one should stick with one market during evaluation as there is limited drawdown and trading various markets can work against you and one has a bad day? Well, here's the thing. I would never suggest a newer trader who hasn't had, at the very least 3 years experience trading one market to suddenly start looking at 10, 15, 20. Don't forget that what you're seeing with myself, with Coach Jay, with Coach Paul, with Coach Hope, we have all traded for an extended period of time. Many of us, at the very least, a decade. Some of us 2 decades. Some of us 3 or 4 decades, right? And if I were to tell you my experience with trading multiple products, I didn't start off by looking at platinum, gold, copper, crude oil, gasoline futures. I didn't, right? I started with one product. It was euro, dollar. That was it. One product for 5 whole years. I traded nothing but euro, dollar. That's how I made my first cash, right? After that, I started to maybe pop in a euro-yen trade, rupee, right? Euro-yen. Okay, so every so often, I wouldn't be like, oh, today I'm doing euro-yen. No, I'm doing it. No, euro-dollar was still my main product, but then every so often I would find a decent trade in euro-yen. After that, we had the European austerity measures. I decided to move into futures. I go to the futures desk. They tried to put me on ES. They tried to put me on fixed income, like a whole bunch of stuff. Didn't work out. I didn't like those markets. I eventually settled on crude oil. Then I traded crude oil, just crude oil for 2 years. Nothing else. I stopped trading euro for the most part. Came back to it a little bit in 2015. But again, it wasn't nearly as liquid. But I still, I was still able to find some trades there, especially during the early parts of the European session. And then, after that, after trading crude oil for 2 years, somebody said, hey, gold has been moving pretty well. So I started looking at gold. And then I did nothing but crude oil and gold for another 2 years. Okay? So it wasn't like, oh yeah, Dee just got born into the world and suddenly she's trading like 12 products. No. I'm very selective what I want to see. So in effect, I have a systematic method that enables me to see a setup. That is down to the volatility of the product. So do we have enough VIX in order for this particular setup to play out? That's step one. Step two, trade location from a larger time frame. Is it at a good trade location in order for me to warrant some big trade, mean reversion trade? If not, I will still default to my main market. I'm not going to go, oh yeah, let's trade platinum today. Nothing's going on, but let's still trade it. No, I will go to gasoline futures. So I will go, all right, RBOB today might be a range bound day. That's my main market. So let's trade that because I know it well. I know when it breathes, how it lives, right? But then if I see no good setup there, we're not in a range, we have a limited auction, we're floating in and around the value area, there's no volume, it's in rollover, and it rolls over every month. So really you have 3 weeks of good trading in those types of products until you face the rollover. And then you have to go somewhere else if you want to still trade. Or you can take time off, your choice. So for me, I go to other products, right? So three weeks of the month, I will dedicate enough time to do some trading in RBOB and crude oil. And then for the last month, when everything's in rollover in those markets, I'm like, okay, let's have a look at platinum, let's have a look at copper, let's have a look at this, let's have a look at that. One constant to that is DAX. Like I do almost always have DAX in my tradable portfolios. However, I think last year I spent 2 months over the summer where I did nothing in DAX. I just left it alone, didn't see good volume. It was moving in like the initial balance sizes were like 20 ticks. That's never a good sign. Low volume, low initial balance size. And I was like, this doesn't look right. So I didn't trade it for 2 months. But if you are newer, here's what happens if you try to do that. You start with your main market, then that doesn't go well. So now you want more. Not for any kind of a systematic method, but you just want more trades, right? And then you go to another market. And then you screw it up there as well. So now you're sitting in a hole where you'll need a bulldozer to dig yourself out of it. And then you go, oh, now I'm going to look at third market because I didn't F things up enough on the day, right? So let's blow up completely. Kaboom. That's what a newer trader would do. So do I advise that? No, stick to one market. The only time you want to look at something else is if you've observed it enough in order to start understanding its personality, because every product has its own quirks, its own personality. Only then you can maybe look at it. But if you've never looked at a product, don't just go, hey, Dee said, let's look at platinum. Let's trade platinum today for no reason whatsoever. When I look at things, I look at it from a point of view of a systematic method, right? So I'm looking for very particular things in there before I'm like, yeah, this is definitely a trade for me, right? But yeah, I definitely would suggest that you learn your main product, how it moves, how it breathes. The only time to move away from it would be if it's super quiet for months on end and you're like, what the hell's going on? It happened to me in crude oil. For 12 years, it was super liquid. Then we have the election year and it dries up. Luckily, I had other products that I'm quite well versed in, so I was able to pivot. But was it easy? Hell no, it was horrible. It's like I was checking my internet half the time. And even now, you look at crude oil most days and you're like, is it on? Are we on? What's happened? Dee, will you be starting a Bitcoin project? Determine whether it's valid for us to use volume market profile. I'm not going to be doing that, no. Because I don't think there's enough. I don't know. The auction process should work on everything, but in order for the auction process to be valid, you need to have market makers that are actively hedging around particular levels. Without that, it's just going to be a lot of randomness, right? So the auction process is based on centralized exchanges that have market makers that will hedge at certain points to adjust their inventory for the company that they're working with or for. Do we have that in Bitcoin? We have it a little bit. So we have it in BlackRock. We have it in a couple of other big institutions that have taken on Bitcoin ETFs. Is that enough of a knock-on effect to bring that sort of, ideas of the inventory adjustments into Bitcoin? I don't think so, not yet, okay? Not that it won't be someday, but right now I just think it's so new that until we actually get people who are actively holding any significant portfolios in Bitcoin, we're still going to have the whale that is Elon Musk, who decides to do something with it, and the whole market goes up and down. So he's still the market maker there. I don't want to be involved with that, okay? When the whole market hangs on one person, that is called cornering the market, and in many ways it is kind of illegal. But crypto is a new asset class, and there's a lot of weirdness that they've allowed in there because the blockchain and the anonymity of the whole thing. But let's face it, we all know, what's going on there. So for me, it's too risky to start looking at that and recommending it to people. Now, Tommy, you have to understand that, I have been sort of public facing for a number of years now. And whilst I don't think that I'm like be all and end all by any means, I do think that there are people who follow what I say quite a lot. So in that respect, I have a responsibility to not give people products, which also includes certain prop firms, and to advise them effectively to trade something that I don't personally believe in. Right now, I think that the auction process in Bitcoin is highly suspect. And I do not think that I should be starting anything Bitcoin-wise until that stabilizes, right? We're in the futures market. This is not like some sort of a crypto exchange where we're like, yeah, we have like crap coins to offer you today because they're like penny stocks. Yeah, you trade this and you might lose your money, but you might also become a millionaire. I have zero interest in doing that. In case you haven't noticed, my channel, if you haven't checked it out, it says no Lambos, no nonsense for a reason, right? The reason why I went with that tagline is because I got sick and tired of people who are pushing cars in your face. And yet they quite obviously suffer from some compulsive gambling behaviors. And it's like, sort yourself out, mate, I almost feel like, they need a therapist rather than a YouTube channel. And just their behaviors and stuff, I'm, it's like very unstable personalities there. Many of them have, highly suspect backgrounds, and you're like, okay, how about we try to be an upstanding citizen, Is that so hard to not be a ickhead? Clearly, yes, for some people. Okay, let's move on. Hi, I'm new here. May I know what's Gamma Wall? Gamma Wall is taken from the options activity, and it's a gamma exposure area with a lot of interest there, a lot of volume, where the market makers are expected to hedge their inventory. What does that mean? When we get up to that point, if we start either breaking down or touching it, the market makers will consider that kind of a breaking point where they will have to either get rid of some inventory or buy more, right? So that's why around about those levels, you will see some very specific market behaviors. So I like to put them on my chart and track them. So until we're there, I really don't have anything else to do. I also use the technical supply and demand areas, but that's a discussion for another day because we are getting over time a little bit now. Let's go to the final couple of questions. Johannes Murr says, how long did you stay in the break-even stage? So I never really got to a break-even stage. So I was taught supply and demand on large time frames, what a good trading location looks like, higher risk reward. So really from the get-go, I saw profitability. I think maybe there was like 2 or 3 months where I messed around with moving averages, And that was a disaster. That was like in a demo, and I could see that that's just not going to work for me. And me being nosy, I'm like, I need to know price action. I need to know how to read this properly. So I luckily had a banker friend of mine who showed me how they sort of do it, even though they relied a lot on the data and a whole bunch of other things. But from the core perspective, he was like, this is the swing high where a lot of people were shorting. This is the swing low where a lot of people are buying. So when we get to those levels, the risk naturally turns to the opposite side. So you have a naturally low risk and a higher reward. If you can confidently do that over and over, you should be fine. So that's how I started. I probably spent about, I think it was at least like 7 or 8 months on a demo just to make sure that I know what I'm doing. And then I went live. And in the first 2 years, I smashed it. Like I made 70K from like £2,000 up to £70,000. And then I messed it up. So I basically didn't know what a margin call was, and I decided that I was going to start increasing my stop loss. This was my first meeting with my fight or flight response and the primal side of my brain. Luckily, it wasn't any money that I needed. It was all profits. But it was still painful. It felt like second death, I will be honest. Like, it was horrible. I felt that I disappointed myself. I felt that it was a stupid thing to do. Like, why did I do that? Why did I just not let go? Like, why couldn't I let go? That was the big question. And that put me on to this whole exploration of psychology for the years to come. I did bodybuilding and weightlifting before every trading session to tackle with my emotions, like that I was, feeling, especially after I came back after that loss. But in the end, it all just became a distant memory because I was getting more confident with my setups, backed by data. So I was gathering data more and more the more years passed. I was really deliberately controlling my emotions. And in the end, I decided, okay, well, I think I know what I'm doing now, right? But it still took me a long time to actually get properly consistent and to go, okay, this is where I messed up. I need to pull this together. This needs to be completely eliminated. Like, for example, it's like a time of day that's just not working for me. And let's just, put this into a very, very systematic way of doing things. That's how I trade. I cannot trade without data. I cannot trade on a whim. I cannot trade on like some random feeling. And yes, I do use market profile. But yeah, so I was never really a break-even trader. I was really somebody who found success pretty early on in my journey. And then had a few ups and downs on the way. So I showed the meme of how success looks like. So let's open this as an image. So this would be my journey, right? What people think success looks like. You break even, then you get profitable, and it's just profits. That's not how it looks, okay? This is what my journey was like. So I had profits, then I messed it up, then I sort of had profits again, then I messed it up again, and then slowly over time, you're like, okay, yes, I'm sort of getting it. I am profitable. I've made a lot of cash. But I'm still not sure what the hell's going on here. And then finally you get to a point at about 10-year mark, which is where I found, all right, now I know what I'm doing. And I can confidently talk about my setups and I know exactly what should happen. I've seen it a million times. That's when you get to a straight line. But even then, you can have weird events like, black swan events that put a wrench in the works and stuff. So it's always a risk. Markets are risky. However, don't be fooled that once you're past break even, it's all hunky-dory, peachy, and all of that rest of the stuff. It's a journey. It's a constant journey of self-regulation. So regulating yourself to not do stupid things. Making sure that you're keeping tabs on the market state because market state changes as well. and just making sure that you are data gathering all the time. So yeah. And finally, are you using market profile in strategy? Yes. So the market profile is a big part of my intraday strategy. I use 4 different things in my strategy, one of which is time of day, and another one is market profile. Do I use it to a T? No, I actually evolved a lot of the things that I thought were not really applicable for my particular markets or in today's day and age. So I've said it back in 2018 when I was creating my methodology in like a systematic sort of course that's CPD certified. I said that I don't teach certain parts of profile because I never noticed them being relevant, right? Especially not for my markets. And Dalton now is coming out with a book that says that certain parts of the profile are less relevant. So turns out I was right. Okay, so some parts of the profile are very useful. Other parts needed a tweak. For example, value acceptance. And I've even spoke to Hogue about this. Value acceptance in my products, if it's going to happen, it's going to just happen, right? One 30-minute TPO close inside the value, if you've got the right levels and stuff, that's all it takes. If you wait for 2 TPOs close inside value as per the original market profile, you're going to miss the whole bloody setup. And it's going to rotate in one go. And then you'll be like, well, great, I could see the value acceptance, but I wasn't able to make money. So over time, I kind of evolved it. And that's why it's not called the market profile, 2.0. It's called the market stalkers method, because it's not just profile. It's a whole bunch of things. It's a multi-time frame analysis. It's very specific times of day that we're looking for certain setups. And it's an entire methodology, right? The reason why it exists is because I kind of stumbled into it. People were interested, just like this. Dee, what are you using in your trading? It happened a lot in office. Hey, how did you see that trade? Oh, well, I saw it this way and that way and that way. And then I kept having to explain that same thing to different people over and over. So at some point I was like, I'm just going to put this online because I can't, I've just spoken to 20 different people and I've explained exactly the same setup. So I started making videos. And then I started getting random people coming to me going, hey, where do I learn this? Do you have a book? Do you have a course? And I'm like, no, and no. And I kept saying, I'm just a trader. I don't teach this. I don't know. It's just like an interesting thing that some people find helpful. And they're like, well, I really want to teach the ins and outs. Can you show me? And then like a lunatic, what I did, I was spending my time for free teaching people one by one. Okay, this was the beginning of the Market Stalkers courses. So I would be going out to dinner with my husband and staring at my phone because I'd be on Skype all the time talking to people and trying to explain them charts and stuff. When it started to eat into my life to the point where I'm like, I need to change something, I started putting things on YouTube. Again, we got a whole bunch of people interested in it. And then I thought to myself, well, I don't know, maybe I should make a course. Maybe, I don't know. Do people really want to see this? But I didn't want to just make a random course with 4-hour webinars where I just waffle on. I wanted it to be super structured. I wanted it to increase your skills one by one, just like you do in music, because I came from that world and I know how to level up people's skills. And at the time, I actually met my business partner who said, yeah, you should absolutely make a course, but, let's make it special. And I'm like, let's make it special. Excellent. So I started working on it. It actually took me nearly 2 years to put everything together, believe it or not. And since then, because we're CPD certified, every year we review the course, we review the students' questions, and then we will add lectures to it in order to answer more things in depth that are either unclear, or that's a part of the CPD certification. You have to do that. And then also when you go through our course, if you're in the UK, you can actually claim your CPD hours if you work in those sort of industries. So any lawyers, doctors, you can actually apply that to your CPD hours per year. So hopefully that kind of clarifies things. It wasn't any sort of a serious business decision where I was like, yes, we're going to sell courses. It was just like, I need to make this a little bit more efficient so that it's not eating up into my time. You can see that I put out a lot of the methodology out there, and you can easily reverse engineer whatever I say if you can be bothered. But if you don't want to do that, the course is there. I don't push it into anybody's faces. If you're interested, then fine. If you find value in what I'm saying, go check it out. If not, that's totally cool. We can just hang here. All right, let's see what's going on. I see some sizing things. Yeah, so, all right, so let's maybe leave all of that for the next day. We have spent enough time today. Thank you for being here with me. Okay, there's Blue Boy that says something funny. They say women are better at trading because they don't have to battle ego. Oh, we battle egos, mate. That's not it. I think it's just the fact that we are not afraid to be in touch with our emotions. It's not like we have egos, but it's the fact that we don't hide emotions. We're just like, we don't try to push them down, and we let the emotions out and we admit when we're wrong. But that's not a lack of ego thing. That's just like, okay, I feel like shit after a losing trade, but that's okay. You can go cry it out in the corner and come back. Whereas with men, it's like, I'm going to keep it down. I'm a man, I cannot cry. So yeah, I think it's not a lack of ego. We do have egos. It's being more in touch with the emotional side. All right, I'm going to finish it on that. Thank you so much for joining me. We're going to tackle Justin's footprint chart question tomorrow. I will see you again tomorrow for another London session. If you want to come and chill with us on the main broadcast, fill out a casting call, which I'm going to put into the chat right now. Until tomorrow, this has been the London session on TopstepTV. I'm Deeyana Angelo, and I'll see you again very soon. Take care.